It is the 6th of July, and Mark Petrino has something special lined up for you today in the stock market. Mark, what do you got, buddy?
Well, I got a cough right now. All right, I'm calm. I'm good. I'm good. Um, let's just see here. I want to talk about this. I think we should kind of start off with like the most interesting news story of the day. We're talking about having a schedule. So I think this Mullen Automotive is a pretty interesting thing to look at here.
You got to share your screen.
Oh yeah, that would help.
Yeah, would help.
All right. So we can see that, all right?
Yep, got her loaded up.
Now, this happens a lot, all right? The company falls apart, and the management blames their stock decline on short sellers. And that's just not how it works, all right? Look at this, man. This thing has gone from, God, this thing has gone from, wow. So one time this got up to over $100 a share, and now it's trading. It's actually, I'm going back even farther. It got up to $500 a share, and now it's at 17 cents.
Use your little ruler tool on that one, Mark. Oh, actually, no, it was an $8.50 a share.
Wow, look at this. We go all the way back, $16,000. I don't know if my ruler would.
Could you imagine the poor bastard? Could you imagine the poor bastard being trapped right there? Because there is people trapped right there.
I can understand why these people are upset, right? Just say you had a million shares, and in February that means you had $10 million. Now you got 17,000.
Yeah, so, crazy.
But what I want to mention is that a lot of times the management, they need a scapegoat, so they. Hey, Mr. Steven. Hello, Sean. Yeah, so they look for a scapegoat. All right. The stock was down 85%, and it is. Let's see here. They're hiring a law firm to look into naked short selling. Now, let me just say what short selling is for people who don't know. People who, when you sell short, you actually borrow the shares from someone else. And when you say like, who's going to lend me shares? Well, when you sign up for your brokerage account, there's something in the fine print there that'll say that if your shares are in your margin account, it's okay for you to lend them out. So if you want to short a stock, you have to call up your broker and say, hey, I want to short this stock. Can you find some shares for me to borrow? And the vast majority of the time will come back and say yes. Okay. A naked short seller is someone who sells the stock without borrowing it. So they have no way to cover it. Now, here's a couple things. First of all, a large short interest in a stock is actually bullish for it, because guess what? Everyone who's short needs to buy those shares back at some point. Yep. So for every share that's short, you have a guaranteed buyer. All right. Second of all, I don't know, maybe I suppose it goes on, but I don't know if it's as prevalent as people think. But as someone who is in an institutional trading desk for over 20 years, it was just like, if I wanted to naked short sell something, it would have been impossible. It would have been impossible. First of all, you have to tell your broker if it's a short sale or a long sale. And when you tell them it's a short sale, they're going to say, all right, what's the code, or who did you borrow the shares from? When you borrow shares, they give you a code, and then you put that in there and you send it over on your electronic communication system. But when you're trading, okay, there's the broker, there's the person who is on the other side of the trade, meaning the person who's going to buy or sell your shares from you. Then in the institution world, each of those, the buyer and the seller, their accounts are going to be kept at what we call custodian banks. So there's 5 parties involved in every transaction. So if I was to go sell shares without borrowing, just say I lied to my broker and I said, yeah, can you sell these shares short? I borrowed them from a different broker and here's my code. And they say, okay, go ahead. Well, the next day you would get a call from your client or the custodian bank saying, why are you selling shares that aren't in the account? Because they audit that stuff. They look at it. So I don't even know how it would be possible to naked short sale shares if you're in like a legitimate institution that has a compliance department and has people that are somewhat ethical. So I think this is just sour grapes. Like I said, if someone sells something short, they got to buy it back. So it could end up being a positive thing.
That's the value of the time that you've had in the stock market, Mark, because you've been through these things so many times. You understand exactly what's happening. There's no difference in business cycles. When you've been in business for a number of years, you see the same cycle over and over again, and it's basically just following trends.
Yeah, well, yeah. I mean, I can't really imagine something I haven't seen. I guess I could always be surprised, but you see like what's going on with FTX and that scam Freud Bankman and like other like this has happened before. You know what I mean? Like I lived through Madoff. Madoff was actually, when I first started, Madoff was one of the top 3 over-the-counter firms in the world. I traded with them all the time.
Wow.
It was them, Smith Barney, and I don't remember who the third one was. It might have been Goldman, or maybe Knight. But anyway, going back to this short selling, I just don't know how you could short sell. I mean, I can't imagine how you can do it unless you're maybe a really crooked trader and you're paying off or giving kickbacks to your broker, or maybe they're giving kickbacks to you. That's usually how it works. Is they give kickbacks to the clients because then the clients do more business with them. So this guy I worked with a long time ago, he ended up going to another firm and getting caught doing that, and he got kicked out of the industry. But that stuff is very rare. I mean, no one wants to. You don't give up a career where you have the potential to earn a lot of money for a little bit of a short-term gain. So going back to this here, I just don't know how. All right, the company noted that Christian Attar is prosecuted and collected millions of dollars in total damages on behalf of clients from those who have engaged in market manipulation scheme. That could be a completely different thing than short selling.
Yeah.
So they would have to go to the brokers. I don't see how it could be done. I don't see how it could be done because, for you to do it, you'd have to like lie to a lot of people, and then it was going to show up on all your reports. Like the next day, the client's going to get a thing, and it's going to have their statement of all their positions, and it's going to show, oh, we're short these shares. Like why are you selling shares that you haven't borrowed, or why are you selling shares that we don't own? So I just think it's sour grapes. So now let's go take a look at the company's website to see if we can get any more insight. So I'm going to type in the symbol, ZEMULN, and then IR for investor relations. And that should bring us right to it. So now, I'll actually admit I was looking at this last night, and I think it's kind of odd that they don't have their last earnings statement here in the news.
But they're suing somebody.
What's that?
But they're hired a lawyer to stop the short selling, and they won't show you their books.
Well, I mean, it's not like they hid them. They're just not. We could find them somewhere.
They're not proud. So they're not proud of their books. Is basically what you're saying. They're not in the firm.
Yeah, a lot of times it's not what you see; it's what you don't see.
Right.
That can tell you something. All right, so I'm going to go to a different place. I guess I'll go to Yahoo Finance because their stuff is actually pretty good for a free site.
Mm-hmm.
Yahoo Finance. And I'm going to tech stocks are refusing to listen to the bond market. I'm going to just bring up Mullen. And let's just go take a look at their financials. Because there's a reason why stocks become 17 cents.
Yes.
And the other question I would have too is, as far as I know, you can't short a stock unless it's marginable. And penny stocks are not marginable. So, like, no one said, like, oh, let's short it at 25 cents. Now look at their numbers here. It's like, oh, gee, maybe their stock is a penny stock because they're losing. Look at how much they're losing here. Yeah. All right, so the TTM means trailing 12 months. So this is little bit out of date, but they could be on a different fiscal year. So maybe this isn't as far back as you think. Pre-tax income. Okay, here we go. So in the quarter leading up to September in 19, they lost 40 million. In 20, they lost 30 million. 21, they lost 44 million. Last year, they lost $740 million. So this is why the stock is a penny stock.
Don't forget to mention they're on pace to lose $1 billion this year.
I didn't hear that. I'm not very familiar
But
with
you
the
see
company.
that right there, where your TTM says it's at paced at 960, negative 960.
Yeah, no, this is from last year.
Oh, okay, sorry.
This stands for trailing 12 months.
Okay, sorry.
So that's going backwards. Look at this. It's almost. I mean, I hate to laugh because I know people got burned, but they lost $70 a share. I mean, that's not 70 cents. That's $70 a share. I don't think I've ever seen anything quite like this, to be perfectly honest with you. I mean, that's just. It's almost like just mind bending.
Well, Mark, this EV revolution is kind of like, you have to shake out all the losers. And I'm sure there'll be 2 or 3 that stick around at the end of it. But I mean, there's 30 or 40 EV makers.
Yeah, it'll be a consolidation.
Yeah, absolutely.
When automobiles, and this happens with a lot of industries, we saw it with the cannabis industry 5 years ago, but when automobiles first came out, within 5 years of them being a viable business model, I think there was like 300 automakers here in the States.
Mm-hmm.
And then like a decade later, there was the big 3. So I suppose something like that could happen, but I just get kind of, I don't know. I guess I just take it a little personal when, not that I take it personally, but when people try to blame, like, oh, it's not our fault. It's not our fault. We lost $70 a share. It's those evil market makers, or it's those hedge fund traders.
No, it's piss poor management, and it's just bad leadership. If you're selling a product that is just a dream anyway, and you can make 40,000 of them over the course of 3 years, that still doesn't pay for anything. Not when you think about research and development, funding buildings, and all this other stuff. It's impossible for these people to even catch a bid. And then you've got infrastructure that can't support the people plugging the things in. So, I mean, ultimately you end up with a $70,000 boat anchor.
Yeah.
And listen, when we had hurricanes down here, they were swamping the Teslas down south in Fort Myers and Naples. And those things got hauled out of here in garbage trucks. Because once the salt hits the battery, it's done. And then you've got a car that's brand new that's shot. So, I mean, I don't know. There's a need for them in some places, maybe if you want them. But I think if we diversified all that, it would be different. If you have, the majority in oil, since the majority of the products that we have in the world are made from oil. And then a little bit of research, solar and electricity would be great, but not the way they're doing it.
Yeah. All right. So let's go through the S&P and the various sectors here. Now, we can see we're trading down a little bit this morning, about 50 basis points to 440. And this goes right to this fact that some price levels are more important than others in the markets, in the financial markets. And that's just how it is. So we rallied and then we stalled out right around this 443 level. Now, why is there resistance at 443? Is it a coincidence? No, it's resistance because it was resistance here. They say that markets have memories, and what that refers to is the fact that these levels that are important can stay intact for a long time. Excuse me 1 second. So think about this. There are people who bought here, and this was on the 15th and the 16th of June, who paid around 443, and you can notice there was like this big, powerful move, really aggressive buying, but then the next day it came right back. So a lot of the people who bought up here, they now decide that they want to get out, but they don't want to lose money. So they tell themselves, well, if I get out at break even, I'm going to. So if this thing gets back to where I bought it, I'm going to try to sell it. So if there's enough of these remorseful people, or remorseful buyers placing sellers, the level that was resistance can become resistance again. And that's exactly what happened. Now, a lot of times when things get to resistance, Well, let me just say first, when a market's moving higher, there's not enough. So you got to think in terms of supply and demand. There's not enough supply or sell orders to fill all the demand or buy orders. So buyers have to pay higher prices. They have to pay premiums, and that forces the uptrend. When we get up to resistance, the tide turns. For whatever reason, there's a lot of sellers at that level, and there's more supply than there is demand. Now, some of these sellers, they notice that, oh, gee, the share price isn't moving any higher. That must mean that there's other sellers coming into the market. And then they get worried that they're going to miss out. The buyers are going to go to who's ever willing to pay the lowest, who's ever willing to sell at the lowest price. So then the sellers start undercutting each other. Like one person might be like, oh, I'm at 443. Next person comes along, don't buy them from him. I'll sell them to you at 442. So forth and so on. And then you get this snowball effect, and that could push the share price lower. And this morning we're trading right about here. So we're trading right at 440 and a half, and we closed at 443. So again, it's all about where these important price levels are here. Now we go through the sectors, and if you want to know what the sectors are, you can come up to, well, these are these spider ETFs, right? There's a whole family of them, and they're run by State Street. So if you type in the symbol, and then you type in SSGA for State Street Global Advisors, it'll bring you right to what we call the fact sheet. So we can look at our holdings, and these are the various sectors that make up the market. And different sectors, I say, are in the driver's seat at different times. So by paying attention to sectors, you can kind of get insight into where the broad market's going to go. Now, utilities, real estate, materials, these are very small, only about 2.5 each. So they don't really have an effect on the market. Energy is only 4.1%, but it could have an effect on the market as well. I think when I started doing this, energy was actually the biggest sector, and now it's 4%. It just shows you how much technology has grown.
Mm-hmm.
Consumer staples are pretty interesting to watch sometimes, because sometimes money flows into consumer staples before the rest of the market goes down. This is what we call a flight to safety, where money managers, and I guess regular people as well, they position themselves in stocks that they perceive are less risky. So they sell like their high tech stuff, and they go buy companies like Procter and Gamble. And then we got industrials, communication services, financials. Right now, I think financials are in charge. So that's, I think, is the most important thing to watch now. Consumer discretionary, tech, and healthcare. So we'll start off with tech, because that's the biggest sector.
So for a new trader, Mark, if they took, maybe say they look at the top percentage stocks in those different sectors and just followed, maybe looked at the top 2 or 3 stocks in those sectors to watch and see what each sector is going to do to be able to gauge it, correct?
Yeah, just like you can watch the sectors to kind of get insight into what's going to go on with the S&P, you can watch the stocks to kind of get an idea of what's going to go on in the sector. Now, some of these sectors, like if we're going to look at XLK, the technology sector ETF, if we look at the holdings, you can see that Apple and Microsoft are together about 45% or 46%. So you have an ETF that probably has 60 or 70 stocks in it, and 2 of them are 45%. So these guys are going to have an influence on the rest of these things, because there tends to be correlation in sectors. So in other words, if people are really aggressively buying this stuff, it might spill over into this stuff, right? Because if people start taking the ETF higher, ETF's got to go out and buy all of these, and that could keep them somewhat correlated. I mean, it's not a perfect correlation, but it's just an idea to watch. So 45 there. Now, if we go to our second biggest sector, healthcare, we can see that it's dominated, but not as much. I'm going to go down to holdings. See this now? United Health is the biggest company here, and it's 8.8%. Johnson & Johnson is 8.5%. So these are the biggest companies in here, but they don't dominate the way the tech sector is dominated. So here's our tech sector, and this is just pretty neutral, maybe slightly down a little bit in the pre-market, down 60 basis points. Here's another phenomenon traders need to know about or understand. A lot of times when we get to a level that was a peak before, it becomes resistance again. So that's what we just saw on the S&P. And here we have the same phenomena, but now we're talking about 18 months ago. So this is an example of market memory. So it's not a coincidence that this thing stalled out right at 177. 177 is where it stalled out in December of 21. So that's the very end of the bull market. We get back up to that level and sellers just come on in, undercut each other, and we push it right back down. So remember, if something's going up and you're wondering, oh, gee, where should I sell this? I just don't want to pull a number out of the air. Well, you can look on the chart, and if you go back in time and you see that there was a level that had been resistance, well, there's a good chance there's going to be resistance there again. So someone might have said, hey, I'm going to sell this if I get to 180. And that's just them guessing. If you let the market tell you what to do, which is one of my mantras, you would say, all right, well, there was resistance at 177 before, even though it was a year and a half ago, there might be resistance there again. So I'm going to sell my shares at 177. And in that case, you wouldn't have missed it. Then we get the sell-off. And here's a different type of buyer's remorse. Well, a different chart pattern, I guess. Here, buyer's remorse can turn support into resistance. People buy here and they regret doing so when the price goes lower. They tell themselves, gee, if this thing comes back to my level, I'm going to sell and get out at break even. So we got a large group of remorseful buyers placing sell orders at the level that was support. That converts support into resistance. Over here, we can see another phenomenon. Resistance becomes support. And this is our seller's remorse. People sell, and then when the price goes lower, they regret selling. They tell themselves, I'm going to buy my shares back if I get them at the same price I sold them at. So you have remorseful sellers placing buy orders at the level that was resistance, and it turns it into support if there are enough of them. And you can see on this chart, I mean, think about it. It's really kind of, it's something I think people take for granted, but this is a trillion and trillions of dollars here of industry, right? How is it possible that the sector has the same exact valuations at two such different times? Now, someone who's like a fundamental analyst or maybe an academic would not be able to explain that to you. But if you understand that what we're looking at here is a graphical illustration of supply and demand in human psychology, it makes it easier to understand. I mean, you don't need to be a guru to see how some of these levels are more important than others.
Wasn't that right in December at the start of the bear market? You need me to send you a glass?
Yeah, I would like one actually. Nah, we got a well here, so I don't like to drink the well water.
No, I got you.
So we got like bottles of spring water everywhere. All right, so that's our tech sector. But to me, right now, it looks like I would say neutral to maybe slightly down. And it is down about 60 basis points. Next biggest sector is healthcare. So we're going to go over to XLV. And this is kind of looking down a little bit this morning, but it's been in this tight range. So I don't really see much going on in healthcare. That looks kind of neutral to me as well. And when we're looking for something to trade, right, we want something that looks like it's going to make a move imminently. Mm-hmm. And when I say imminently, at least for my style, I mean over the next few days or maybe a week or two, because that's how you make money, is you buy or sell things that are about to move. So when I say neutral, it just doesn't look to me like we're going to do anything tradable over the next couple sessions. What makes moves? Well, things that are overbought or oversold, things that get to support or resistance. So if something's oversold and it's at support, there's a chance that makes an imminent rebound and goes up a little bit. We're just right in the middle of a range. We got neutral momentum, pretty much right in the middle of the range it's been in for the last month. So this to me doesn't really look like much is going on. So tech looks kind of neutral. Healthcare looks kind of neutral. But now let's go to the financials. And like I said before, this is what I think is just to get an idea of what's going to happen. And in the institutional world, this is the type of stuff that people look at. You know, we're not looking at Gann theory or whatever, harmonic charts. Just looking at, like what looks like it's going to move. Now, here, this looks like there's a chance we could make a move here. That's why I put breakout. Notice how we have this level that was support, and buyer's remorse turned it from support into resistance. But now we look like we're above it, okay? I mean, it's still a little too soon to tell. This is 33.50. Yesterday's close was 33.83. So we don't want to get too precise, but we can, with these ETFs, things can be pretty precise. I mean, look how clear the support level is down here. So we have this group of sellers or investors who want to sell, and that's where resistance comes from. If we get above resistance, we can call that a breakout if it holds, and this tells us something. It tells us that the investors who created that resistance with their sell orders are gone. They're out of the market. They're out of the way. Mm-hmm. So anytime you take supply off of a market, it sets the stage for the demand side to move it higher. So my guess is this either consolidates for a few more days and then starts to work higher, or it just completely breaks down and this is a false breakout and we get a rapid move lower, and that would take, I think, the broader markets lower as well. So this looks like it's at an interesting position to me. Like when we were looking at healthcare, it just doesn't look to me like there's going to be anything going on there. Like to put it in Mr. Stevens' famous words, it's like you got to fish when the fish are biting, right? If the fish aren't biting, you're not going to catch anything.
That's right.
But if they are biting, you could have a really good day. And a lot of trading is this. A lot of people feel like they always need to be in the market. They feel like they need to be active every day. And if you don't see anything that really, looks compelling, it's okay to not trade that day. You don't want to force things. One of my favorite quotes is by Jesse Livermore, who was a great trader 100 years ago. And actually I have his book sitting right over there on my shelf. And, he said he made his money by being out of the market and not being in the market. And I think what that refers to is he had the patience to wait for important or, compelling looking things to come along. So I would be watching this like a hawk right now. See if this starts to break, then you can look at stocks within the financial sector to maybe buy puts on. There's this ETF, FAZ, F-A-Z, which is designed to move in the opposite direction of financials. So if financials start going down, this will start going up. And this is also leverage. It's going to go up by about 3 times as much. So if XLF goes down 1%, this is going to be up about 3%. So just because you don't trade options doesn't mean that you can't make money in down markets. There's a whole slew of these inverse ETFs out there now, and they're a relatively new invention as well. Or I don't know if invention is the right word, but all right. So here we see our consumer discretionary sector. This is the stuff people want as opposed to stuff people need. Staples is what people need. And we can see real clearly here, resistance here, converted into support here, and it converted back into resistance. And when we got to this little former peak here, we hit a resistance level. And notice we didn't hit resistance in here where we were over here. We didn't hit it there. We hit it at the level that was this former peak. Mm-hmm. Markets go in peaks and valleys, and you have to look and see where the peaks and valleys are. Now look what happened again. We hit resistance at a level that was a peak again, or before. My terminology are mixed up. So this was a peak last August, so almost a year ago, and the shares get to that price and they run right into resistance. So that's not a it's not a coincidence. And here we're going higher. There is no resistance. Well, back here, there's really no peak. We get up to the level that was the peak. Guess what? We've stalled out for the last 2 days, and now this morning we're looking down pretty good, 70 basis points. So I would suspect, unless something amazing happens, this is not going to get through this, at least today. I'm not going to get through this today. And it's starting to trend lower too. Like right now in the pre-market, it's lower than any place it had trading at over the last 2 days.
It's amazing that this is just a graphical illustration of people's psychological thoughts, because the fact that it'll go back to that same exact level so far away and back in time, it's shocking, really, if you think about it. It's actually amazing.
It is. It is. And people take it for granted. Like I said, fundamental people, and I know we're going to have a lot of fundamental managers watching us over the next few months. But a fundamental manager, they don't really think in these terms. They don't really understand how this could happen. And in their way of thinking, it really couldn't. Like, what has happened why is this sector have the same exact valuation now as it did last August? Right? I mean, so much has changed. Interest rates have changed. Oil prices have changed. Why did this sector lose 26% of its value between August of 22 and December of 22? You know, and then what happened that it gained 35% in value since then? I mean, like, what has gone on within this sector? And the real answer is just investors' perceptions have changed.
Yeah.
And that's what moves stock prices. It's not about like, oh, the price to earnings ratio is this and the EBITDA is that. I mean, that stuff might come into play over the long term, but as traders, we need to understand that we're not looking at mumbo jumbo here. I mean, people have said to me like, oh, you're one of those chart guys, you know, you believe in like astrology and reading tea leaves. And the reason why people think that is because so many technical analysts just don't know what they're doing. My experience is that, you know, they might know the patterns and they might know what momentum is, but they don't really understand it. You know, even some people that are very well known, if you ask them, why does support become resistance? They may not be able to tell you. I mean, some of them would, but a lot of them would just be like, you know what, you know? And I think that's because a lot of them don't have real trading experience. I mean, if you look on YouTube, there's some of the technical analysis stuff on there that I've watched. It's just embarrassing for the person. And, you know, maybe the people that do it believe it and they're just trying to tell people, or maybe they know it's a sham. I mean, I don't know. I don't know. It's all about supply. If you can understand supply and demand, you can understand how to read a chart. And, you know, you got to know where the price levels are, what's the momentum, what are the trends, and what's the psychology. And that's what technical analysis, in my opinion, should be, is a study of those four things. It's not like having these bizarro things. Like, look at this. Out of all the things I've seen in my day, these could probably be the dumbest. They call them, these are harmonic charts. I mean, you know, it's like what is this thing? You know, I mean, you can make this thing look like however you want, right? We can make it like a butterfly. It's like, oh, you know, look, there's the old butterfly pattern. It's time to buy. Right?
Right. I mean, yeah, see, I've been very simple with what I use. I only use the RSI and the Fisher transform and just the levels that I set on the chart. I don't really do a whole lot of fancy stuff with the Fibonacci's. I mean, I've used them before, and basically they just go back and show you the levels, but you're doing the same thing with that. If you start at the top and you drag it to the bottom, there's your levels. So, I mean, you know, I don't know.
Yeah, it's in the eye of the beholder. Absolutely. It's like one of those Rorschach tests, you know.
Yeah.
People see what they want to see. Speaking of overbought, I should address that a little bit. Overbought refers to a company's momentum, or a stock, or I should say a security's momentum. Let me just I want to fix the lower band here. And momentum is how far something has moved in a particular time frame. It's not the same as volatility. Well, it's all right. You know, if something is at 20 and then 3 weeks later it's still at 20, well, there's no momentum.
Right.
It just hasn't changed. If something gets above its typical or usual range, we call it overbought. And if it gets below it, we call it oversold. Now, if we look here, and again, these are psychological things. Oversold comes from really, really aggressive selling. What drives selling? People are panicking. Overbought is when people are really euphoric and they're just willing to pay any price. Big, simple principle, right? When markets are oversold and they get to support, they tend to bounce. And when markets are overbought and they get to resistance, they tend to sell off. So as we can see here, we got our resistance becoming support. But when we're rallying here, this is the RSI indicator. When this blue line is above this horizontal red line, it's considered to be overbought. Mm-hmm. So here we have a perfect example. We get to a resistance level. We get to this price level that was support and resistance. So we know this is an important level. And we get really overbought. So overbought at resistance, good chance it sells off, and that's exactly what happened. We could see here too, this wasn't a clear support level, but it told us that this sell-off here was coming to an end. So it doesn't have to be really complicated. People make it more complicated than it is. And one of the ways that you can use this indicator is you have to establish like a set of rules to use. People think just by having a lot of fancy charts and graphs and oscillators on your screen is going to like give them these insights, but it's probably just going to confuse you. So there are rules and there are tools. The RSI is the tool. How are you going to use it? There's different ways. One way is to, all right, when we get above the red line, I'm going to pay attention. If we get back below the red line, that's my rule. That's my selling rule. Get above the red line, we're set up. We're like at a race where it's like get ready, get set, get back down below the red line, and that's the go. So that's a very simple rule. So you would have like basically top ticked it here, or maybe off by 1 day. Now we're really overbought again. Now here we got overbought, and we didn't really go much lower, but it told us that this uptrend was going to pause or come to some kind of consolidation. So overbought and oversold, like anything, they're not perfect, but they are things you should pay attention to. There's momentum. And, if you have stocks within this sector and you're wondering, oh, gee, when should I sell it? Well, maybe you can use the sector levels as an idea to give you an idea of where to place your orders, as opposed to just looking at the stock. If on the stock you see something that's just not very clear, you could just kind of go over the stock's head, I guess, and just play it in the sector, get your signals from the sector. Next up, we have our industrial sector.
Mark, with the length of time that you've been doing this, do you go back and look at all the time frames to get yourself what they call full time frame continuity? Or do you just kind of see it now on the daily and understand what it's going to do?
Well, I mean, market memory could last a long time. So it's always good to look back into the past. I mean, I've seen price levels. Well, we saw on XLK that it's been 18 months. I mean, I've seen price levels that were important for years. You can even see some for decades.
Oh, there was one on Ford. That $15 level on Ford was like 8 or 10 years ago when they hit it this last time. If you go back.
Yeah, well, people like nice round levels. So 15 would be one of them. Well, look at that.
See how far back that went?
Yeah. Wow, it's hard to believe this got down to $1.10.
Yeah.
During the housing crisis. But yeah, this is we can see the clear levels here in this stock.
So you could low a line on 15, and if you bought this stock, anything, I don't know, that line on 15 goes all the way back forever.
Yeah.
It's wild.
Yeah, you can see here. Now, let's think about this, right? The market's going lower. There's not enough buyers around to suck in all the demand or all the supply. So the sellers are forced to sell their shares at a lower price. In other words, someone might come into the market here when it's at 13.5 and they got 100,000 shares to sell. Well, maybe they can only sell 10,000. They got to sell the next 10,000 down at 1340. Then maybe they would gladly sell their other 80,000 shares there, but there's just no one around to buy them. So they're forced to sell it at a lower price. So when we're going lower, that's what's going on. When we get to support, notice it was support here. Investors who want to buy are like, gee, this ain't going down anymore. I better jump in there and start buying it now. And then you get the opposite of what happens at resistance. You get buyers who are afraid they're going to miss out, because if there's someone who's willing to pay a higher price, that's who the sellers are going to go to. So then they start outbidding each other. One person might say, listen, I'll pay you $11.20. Another person comes along and says, I'll pay you $11.30. Someone else comes along and says, I'll pay you $11.40. And this forces the uptrend. So this is another example of psychology. We get to support and we bounce. This shows anxious buyers who are afraid if they're going to miss out. Again, there's no way you could ever explain to me why this company was valued at 11 in October, and a month later was at 14.5. Like, what happened within that time frame that made the company increase in valuation by that much? And the answer is nothing. It's just it's just the psychology. So we get to resistance. Same thing here. This is resistance forms. For whatever reason, this is where the investors decided to come in, sell. Investors who want to sell notice prices aren't moving any higher, so they all jump in front of each other, and then we go down. One of the problems newer traders have, and it's easy to understand why, but one of the problems they have is that they think that for every little move in the market, there's some like ulterior reason for it. And maybe sometimes there is, but most of the time it's not. Most of the time when things are moving, it's just some technical thing, like coming off resistance, coming off support. Here's a really good example here of what I mentioned before. I mean, I know people that have built careers off this, right? You get to support, you're oversold, get back in here, and then it's like, wham, time to buy. Same thing happens here. It gets to support, oversold, and it's time to buy. Now, another thing to understand too is that these oscillators or indicators all come with default settings. The default setting for the upper band here is 70. Now, I assume that that's because the guy who invented this probably just said, all right, well, that's going to be my default setting. But it's perfectly okay to go in here and change the settings. It looks to me like this stock is overbought when we get to, say, 65. So I can go in here and I'm going to lower the top line from 70 to 65. Now, all right, so now if I'm going to use this on Ford, get to resistance, we're overbought, time to sell. Same thing happens here. Different stocks have different personalities. So the default range works for a lot of stocks, but sometimes you kind of need to tweak these things, especially if you're only trading a limited number of companies. Maybe all you trade is biotech or all you trade is ETFs. You should spend some time on these things so you can start to like understand the personality of that particular stock. I mean, different stocks do different things because they're traded by different people. All right, so let me go back to industrials here. And once again, we could see, I mean, I could go on ad infinitum, but 103.50 was resistance. And now here's resistance converted into support. People sold back here. And when the price goes higher, a lot of them say, damn, I sold at 103.50. Now it's at 106. I made a mistake. I'm going to buy my shares back if I can get them for the same price I sold them at. So as sellers start to take profits, when we get down to the level that was resistance, it converts into support. And sure enough, that's what happened. And in the past week, this has gone from 103 up to 107, which doesn't sound like much, but for an industrial sector, that's a big move. Yeah. Clear support here. This is something I don't really hear people talk about, is this concept of when something makes a fast move through price levels, if it reverses and gets back to those same price levels, it makes a fast move again, or it has a tendency to. So it's never perfect, right? Just like anything.
No, but I've made a lot of money off of that concept since you showed it to us.
Yeah. And that's because when we blast through these levels really fast, there's not a lot of time for this like vested interest to form. Like one of the reasons why we have resistance is because we have remorseful buyers who are trying to get out. When we just collapse through these levels or fall really fast, you just don't have a lot of time for there to be a lot of people who are buying. I mean, there are buyers, but there's just not a lot. So when we reverse and start going higher, you're not going to have this group of people who would normally be sellers, these remorseful buyers selling. So when buyers come in and when buyers say, man, that move was overdone, I'm going to go buy, there's just not a lot of sellers around. So they're forced to pay a premium to get the sellers off of the sidelines. So make a fast move through price levels. We come back and we make a fast move through other through those same levels. Then after we consolidate, we get back into them and we make another fast move lower. What's the a reason why we have support is because we have remorseful sellers trying to buy their shares back. And if we go through these levels really quickly, or if we gap through them, then there's just not a lot of time for there to be a big concentration of sellers. So after we get up here and the sellers say, you know what, this thing is overdone to the upside, I'm going to come sell. Well, there's not a lot of buyers within this price range. So we can see this on a lot of different things. Fast move up, fast move down. This is a good example here. Fast move down, fast move up. So that's our industrial sector acting very well. Could be probably a little bit overbought now, though. Probably see a little bit of consolidation here. And it is down. So this market's making a fairly decent move lower this morning. What else?
Is industrials weighted the same? I mean, equally weighted, or are there just a couple in industrials that keep it up?
Well, let's go see. So we're going to go type in our symbol for the ETF and then SSGA for State Street Global Advisors.
And remember, guys, all these things Mark shows you are free on the web.
Yeah. Yeah, you don't need to subscribe to a bunch of paying websites other than ours.
It's relatively equal, isn't
it? Yeah. I mean, you got the big guys here, but it's not dominated like the way technology is by one or two companies.
I wonder if it's Raytheon. They've been talking about Raytheon having a damn alien spacecraft for the last couple of weeks.
I don't know, man. There's some weird ass stuff going on out there.
Oh yeah. Well,
I mean, if you asked me 5 years ago, I would have said you got to be crazy.
Oh, you know what? Speaking of which, I wish I had this link to share. I'll have to bring it tomorrow or something to share in the chat. But I found a video yesterday from 1948 that they used to show in the schools on propaganda, and holy smokes, did it blow my mind. Dude, I'm going to send that to you this afternoon so you can watch it. It's about 11 minutes long, but it'll blow your mind.
Well, there's a lot of propaganda now.
Well, that's why it's necessary for people to see stuff like this so that you understand that this is a process that's been going on since the beginning of time. And people are always strategizing how to make you think one way or do something different. It's this whole herd mentality we talk about every day.
Yeah. Yeah, it's true. People are not people are programmed to be followers.
Yes.
Very few people are programmed to be leaders.
A lot of lemmings in the world.
Like I saw a lot of that on the Twilight Zone marathon over the weekend, where you can, get this mass hysteria, or like they think a UFO lands, and then everyone starts thinking everyone else is like an alien. They're the one, and yeah, it's the herd mentality, and people want to be members of a herd because I guess there's safety in numbers, but when you get into a herd, it tends to influence your thinking. And guess what? You go out and you buy Apple. Now, all of a sudden, you're a member of the herd of people that own Apple. So you can become subject to these biases, like confirmation bias, for instance. Someone tells you, hey, you shouldn't have bought Apple. Here's why. And they give you valid reasons, but you tend to ignore them because you have what we call confirmation bias. So humans have not evolved in a way that's conducive to making money. We get emotional, and whenever you make emotional decisions, they sometimes aren't very good ones, and especially in the world of money.
Well, or your country. Our country's running on emotions right now instead of on logic.
Well, the problem is our education system sucks. People are lazy. No one wants to read. Everything is just instant gratification.
Dude, I've been blown away by this guy on Twitter that completely keeps just complaining about these justices doing their constitutional duty to guard the Constitution. These people blow me away with their lack of civic knowledge. They have no clue. They're not being taught shit in school, Mark. It's sad.
That Alexandria Ocasio-Cortez, she was saying how, it's not the job of the justices to like review laws. And it's like, yeah, it is. That's why it was set up.
The whole bloody point of them to determine whether the Constitution has been stepped on by Congress. Just because these people that's the thing that blows me away, right? Congress switches every 2 years. Every 2 years, there's a midterm that can change the dynamics of Congress. So you're saying that every 2 years, the Constitution can just be shredded by whatever party's in control. And that's not the intent of that document at all. And
when you get stupid people like her, who's a former bartender, no offense to bartenders, and she goes from being a bartender to going to Congress, and she has no concept of how anything works. And you know what? I I never liked her, but I had respect for her. But I have no respect anymore because she's a big socialist, and then you find out that she drives an $80,000 Tesla, and she's making all this money by selling shit over the internet. You know, so it's like, oh, great. So you're a socialist until it comes to your money.
Well, right. Well, that's how. I mean, I don't understand how a business person can be a liberal. They have to be conservative in their business. You have times where you have to scrimp down. You can't give it all away. But then you have the liberal mind hive that wants to give away everything that you've got. It's really kind of a real strange thing when I see these liberals poke up that are business owners, and I'm like, how do you do that?
Well, it's easy to give away other people's money. Yeah.
Well, right, but you can't do that as a business owner. You're giving away your money that you're bringing in, so you can't do that.
I mean, I don't know. Just what a. How about when they asked the what's her face there, the energy secretary, like, you know, can we control the price of oil? And she's like, ha ha, like she laughs.
Oh, Jennifer Grantham.
Yeah, it's like we can influence the price of oil. If we drilled more, the price would come down. Pretty darn simple.
Listen, he laid his cabinet full of people that were absolutely worthless, that would follow and do the job that the machine required them to do. We are basically under control of central planners, and that's it. This is the first step towards a socialist state, because they're telling us that the people that are screaming freedom and love America are the Marxists, right? But then they're doing policies that directly come from that playbook. And all people have to do is look back a little bit in history, the same way they do with these stock charts, and they'd understand that history repeats itself, and we're bound to do it again. And it feels like we're right in the middle of it.
Yeah, well, I don't know, man. I mean, I have friends who are Democrats. I'm an independent, but my friends who are Democrats are just like, they can't even believe this stuff that's going on. I mean,
but they'll vote Democrat lockstep every time. And that's what I don't understand, is why we can't get back to the idea that Democrats, Republicans, and moderates all together, right? Independents, we need to be Americans first. And we need to worry about our country more than anything, instead of everybody's individual wanted preferences. Oh man, it looks like we're fixing to have a good day in Google this morning. Woohoo!
Let's go see what that's doing.
It's down to I'm $2 in the money right now. Closing that position at the beginning of the day.
Yeah. Yeah, it looks to me like it's going to go lower. See this support? Well, support has turned into resistance, and now we got the sellers pushing it down. All right, I'm going to get going, but I want to just take a quick look at oil first and see what that's doing, because we can make money trading stocks by watching oil, right? I mean, if oil's moving, ExxonMobil's going to move, Chevron's going to move. But here we got, again, and this is kind of amazing if you think about it, because if you think about how big the oil markets are, how is it that, I mean, we're talking about trillions of dollars all around the world, all this stuff going on, and yet somehow these levels can be really precise. Like when we've gotten down to around 66, 70, that's where the buyers come out. And that's because the vast majority of people that are trading this are just traders, and they're looking at these levels and so forth and so on. In the short term, or even in the intermediate term, this is just investor perceptions. Maybe over the long run, your big macro supply and demand dynamics will kind of overrule. But in the short run, it's got to remember it's the psychology. So let's see if there's any exciting stuff. Ooh, Lazard fires top restructuring banker accused of harassing employees. Reed Snellenbarger acted inappropriately at a party. Oh, man. Sorry, this sounds like a case of someone who had a little bit too much to drink.
Yep.
Let's see. He acted inappropriately towards employees. 48 years old. Oh, no, that's actually the representative. He invited a group of Lazard Financial Advisory employees to a gathering that wasn't sponsored by the firm. Wow. Well, I wonder what he did. It's got to be something sexual, or maybe he tried to start a fight with someone.
You ever made the wrong person mad? This kind of stuff probably happens all the time, Mark. I mean, let's be real.
Yeah. Wait. Oh man, look at that. He worked with Gawker Media. All right, we're not going to touch that. The whole Hulk Hogan thing. Yeah, well, that's today's day and age, right? What people used to, 50, 60 years ago, the 3 martini lunch was like, in. My grandmother told me she was an executive assistant, or back then they called them secretaries, but she said, these, and maybe she was in publishing, and she said these guys would go out for lunch and they would come back and they would just be fucking smashed.
Oh, yeah.
They would just like fall asleep at their desks. And then like at 5 o'clock, they'd get up and they'd go out and do it again. So life is a lot different now. All right, everyone, I'm going to get going, and I will see you all tomorrow morning at 8 o'clock.